Hello everyone, welcome back to Trading Edge. So in today's video we will discuss about another very important parameter of technical analysis, and that is volume. So in today's video we will dive deep into the volume studies on how to use it, how to interpret it, and also how to use it in conjunction with the price action to find excellent trading opportunities in the markets. So before we start, to hit the like button and also subscribe to my channel to never miss any update. So here two bullish candles are formed and two bearish candles are formed. One is formed with a volume less than the average volume, one is formed with the volume higher than the average volume. Similarly here, less and higher. So what is this indicating? Prices have moved from here to here, here to here, and from here to here, from here to here, but the volumes are different. It means here not a large quantity of shares have been exchanged between the buyers and the sellers, and here a large amount of shares have been exchanged or traded between the buyers and the sellers. So which has a higher validation? This one. Why? Because if prices have moved from here to here in both the cases, but this one has a higher volume, which is indicating that here the big players, the institutions, the market makers have entered into the markets, because only they have the huge capital size and they could trade in huge quantities than the retailers. That's why we saw a huge volume activity, but here they were not that interested. That's why we saw a volume which is less than the average volume size. Similarly here prices have moved down from this point to this point with huge volume. What is this indicating? Here the institutions or the market makers are present. That's why there is a huge activity on the volume. They have the money and they have the resources and they have the power to trade in such huge quantities. So between these two candles, which has a higher validation? Obviously this one and not this one, because this one is formed with very low volume. This is indicating there is no presence of the institutions or the market makers. Here they are present. That's why we saw a volume which is higher than the average volume size on that particular instrument. Okay, and also we are assuming the candles which are formed prior to the formation of these candles are of narrow spread and low volume. Okay, and then we saw a huge volume activity with huge downside pressure. Then we can say that yes, this is a activity of the market makers or the institutions, and this price movement has got a validation. But this price movement, although it has moved down the similar points, but it is of less use to us because there are no presence of the institutions. Okay, so this is a very big difference between these two candles. See here, narrow spread, low volume, narrow spread, high volume. So there is a divergence. See, a narrow spread candle should have low volume, obviously, because effort versus result. If the volume activity is this and the spread is narrow, it is indicating that less number of shares have been exchanged between the buyers and the sellers, and also the price movement is very low. But where you see divergence, there is a very important clue that the markets are trying to give us. Say for example here, huge volume, narrow spread. What is this indicating? If this was all buying pressure, prices should have moved up aggressively towards the upside. If this was all selling pressure, prices should have aggressively move down towards the downside. But what is happening, prices are not willing to go up aggressively towards the upside even after huge volume. Similarly here, prices are not ready to go towards the downside even after huge volume activity. So this is indicating there is a divergence. Here what is happening, the volume is less than the average volume and prices have moved very narrowly. Here also same, prices have merely moved from here to here, which is in accordance with the volume. The volume is low and the price movement is also very low here. But what is happening here, the volume is high but the price movement is very low. So there is a divergence. This divergence is indicating that the market makers or the institutions are entering at the markets. That's why there is no upward movement and in this case no downward movement. Otherwise, if this was all buying pressure and this was all selling pressure, prices should have formed a very huge spread candle. Here, huge spread upside candle, but prices are holding at these areas. So this is indicating that there is a sign of weakness here and there is a sign of bullishness here. Okay, so these are very important concepts. Always analyze the price and volume divergence. Okay, see, if prices were in an uptrend, okay, and then this candle is formed with this kind of volume, what is this indicating? That after this uptrend, from here on, the big players are entering into the markets towards the opposite side. They are selling into the markets. That's why prices are not able to move up towards the upside aggressively. Similarly, if we were in a downtrend and this kind of candle is formed with high volume, then the alarm bells should start ringing in our head that now the big players are entering into the markets, because if they were not entering into the markets, then if this was all supply pressure, then prices should have gone down aggressively towards the downside and formed a huge spread downward candle. But what is happening is the volumes are high, the spreads are narrow. This is indicating that the market makers are entering into the markets in the opposite direction. Okay, so I hope you got this very important point. See here, this is the example of shooting star. Similar candles with different volume activity. What is this indicating? See, the shooting star price action appears in most of the uptrend. Okay, it is the classic signal of weakness, and it is only volume which can give us a clear signal as to the relative strength of this weakness. Okay, see, if a shooting star is formed with volume less than the average size, it is indicating that yes, the sellers are present but they are not in huge quantities. The selling pressure is not that great. Okay, second one, same shooting star candle but the volume is of average size. Now we can say that yes, sellers are coming in the markets because the volumes are average sized and also there is a rejection of the higher prices. Okay, so we could now potentially, if we are in a trade in this uptrend and if we see a shooting star candle formation with average volume, then we could say that now markets could potentially take a small pullback. This should be in our minds, and now we could partially book our profits so that our profits are not lost. Okay, but what is happening here? If a shooting star candle is formed with very high volume, what does this indicate? This is indicating that after a strong upward momentum, a shooting star candle is formed with volume which is very high than the average volume size in that particular instrument. This is indicating that the institutions or the market makers are coming in the markets and they are selling aggressively. That's why we saw a rejection of the higher prices with huge volume. Now we could say that if we are in a buying trade, we could now book our profits at this price areas because the institutions have entered into the markets, because high volume activity indicates the presence of the institutions, and particularly if it is formed after a very strong uptrend and we were long from here, we could now potentially book our profits and go home, because prices now could potentially take a pullback or it could reverse. Okay, this should be our mindset. Similarly, the hammer candle. See, hammer candle with low volume is indicating minor weakness in the downtrend. Average volume suggests stronger signs of a possible reversal or a deep retracement in the downtrend, while the ultra high volume hammer is indicating very strong buying momentum by the market makers, that is the institutions, and now we could potentially see upward prices from here. So if we were in a short position and if we see a high volume hammer candle forming at a support area, we could now potentially exit our short trade. Okay, but similarly, if a hammer candle is formed with very low volume than the average volume, we are not that concerned, because low volume means low activity. This is the activity of the retailers, not the institutions. But if it is formed with average volume, we are a tad bit concerned, because after a strong downtrend, if the volume is of average size and a hammer candle is formed which is showing the rejection of the lower prices, we could partially book our profits here and put our stop loss around the last swing highs to not lose our profits. Okay, so see, volume and price analysis not only helps us to get into low risk trading positions, but it also helps us to keep in those positions for a longer period of time. Okay, so if you could interpret the volume activity along with the price behavior, we all know that hammer candle is a sign of a bullish behavior, but if it is combined with volume, then it becomes more potent. Okay, so do remember that. Similarly, if a hanging man is formed after an uptrend, see, I have told you only in the case of a downtrend. If a hammer is formed, this is a sign of a bullish behavior. But if a same candle is formed after a strong uptrend, this is also known as a hanging man pattern. And the same rules apply here also. If the hanging man is formed with high volume, then this is a cause of concern for the bulls, because this is an indication that market makers or the institutions are coming in the markets, and the trend could now potentially change from up to down, or a deep retracement could come in this uptrend. So if we are long from here, we should book our profits around these levels. So the analysis of the price and the volume gives us a very important clue whether to stay in the trade or to exit it, also to enter a trade or to not enter a trade. Okay, see here, after a strong uptrend, what type of candle is this? Indecision candle with huge volume. Okay, so see here the volume was increasing and the prices were also increasing. Okay, opening here, closing here, opening here, closing here. So volume increasing, price is also moving up steadily towards the upside. But what happened here? Huge volume activity, but the spread is narrow. So this is indicating that at this price areas sellers are coming in the markets, that is the market makers or the institutions, because this kind of volume is formed only by the institutions or the market makers. Retailers can't form this kind of huge volumes because they don't have the money. So this is a very, very important concept. You should always ask yourself why the prices are not moving up even after this huge volume. If this was all buying pressure, then prices should have formed a candle like this, huge candle. But what is happening? The spread is narrow and the volume is huge. It is indicating that sellers are coming in the markets at this price area. Okay, see here, this is a uptrend. Okay, in case of the uptrend, the buying legs are of good volumes and the selling legs, that is the pullbacks, are of low volume. The buying legs are of good volume, the pullbacks are of narrow or the lower volume. The buying leg is of higher volume. So in this uptrend we could say that this is a very, very strong uptrend. Why? Because the buying pressure is very, very strong and the selling pressure is very, very weak. So this is in harmony with the price movement. Always analyze the divergences and the harmonies between the price movement and the volume activity. Okay, here the volumes are increasing when the prices are going up and the volumes are decreasing when the prices are coming down. Similarly, when the prices are moving upside, the volumes are increasing. When the prices are going down, the volume is decreasing. So this is a harmonic price volume relationship. Okay, so we could consider this is a very, very strong uptrend. But what is happening here? Prices are going up, volume is also going up. Okay, but when prices are pulling back or taking a retracement, the volume is also going up. Earlier what was happening? The volume was coming down when prices were coming down, but here the volumes are also increasing. So what is this indicating? This is not in divergence with the price movement. If bulls were very, very strong, then after the strong bullish momentum, when prices are coming downside, the volume should have also come down. But now what is happening? The volumes are increasing in this downward momentum. So this is indicating that the bearish pressure is coming in the markets. Okay, again, when the buying leg is forming, the volumes are going down, and when the selling leg is formed, the volumes are going up. So this is indicating, although prices are in a uptrend, the volume is showing us that this is a very, very weak uptrend. Okay, here the sellers are coming in the markets in huge numbers. The selling pressure is increasing. Always remember, a particular volume bar represents equal number of buyers and the sellers. But if the volumes are increasing in the downward legs, this is indicating more quantities of shares have been exchanged between the buyers and the sellers, and the prices have come down. So this is the activity of the institutions or the market makers. But when the prices are going up, the volume is going down. So this is indicating there is less presence of the institutions or the market makers. That's why this is considered a weak uptrend and this is considered a very, very strong uptrend. Okay, see here, see the candles. Each candle is forming, but there is rejection of higher prices. but the volume is going up. So what is this indicating? Candle bodies are getting narrower and narrower, and the upper wicks are increasing in length, which is indicating that buyers are losing momentum and the volume is increasing. So what does this indicate? That at this price areas, institutions are coming in the markets and they are selling off aggressively. Okay, that's why we are seeing increase in volume but decrease in the bullish behavior or the bullish price sentiment. Similarly here opposite, prices are coming down, but here bulls are trying to push the prices towards the upside. These are all bullish behavior, but the volume is going up. So what is this indicating? That the institutions are coming in this market and they are buying at this price areas. Here they were selling. Because we saw huge volumes, this is indicating that the market participants, that is the institutions, not the retailers, they are selling off at this price areas. That's why we are seeing a loss in buying momentum. Here a loss in selling momentum, because institutions are buying aggressively at this price areas. Okay. So here are some templates. Okay, see, if after a very strong and lengthy uptrend this kind of formation is seen with huge volumes, we could potentially say that yes, now this is a distribution zone. Why this could be a potential distribution zone? Because after a strong and established uptrend, prices are consolidating. This is the first point. Okay, here prices are getting sold off. It means sellers are present at this price areas. And then we saw this kind of high volume rejection candles. The volumes are increasing with rejection of the higher prices. So this could be a buying climax after a strong and established uptrend, and now we should look for potential sell setups. Okay, so I hope you understand what I am saying. Similarly here, after a strong and established downtrend, if prices are forming a consolidation phase, it means from here buyers are pushing the prices aggressively towards the upside. Okay, and then we saw high volume rejection candles. So what is this indicating? After a strong and established downtrend, prices are forming a consolidation range. It means buyers are trying their level best to hold these levels and push the prices towards the upside. And then we saw high volume activity. High volume activity indicates the presence of the institutions or the market makers. And also see the rejection here. It means buyers are accumulating at this price area, and soon we could potentially see an upward movement from here. Okay, then after a consolidation phase we see a breakout, and this breakout is formed with very good volume, which is higher than the average volume size. So this volume is considered to be a good volume for this kind of price behavior, because the volume is higher than the average volume size, and also we saw a good breakout momentum which broke this important resistance zone. Okay, after that in the pullback phase we see very less volume activity. So what is this indicating? It is indicating that this price behavior, which is of bullish with good volumes, is validated because high volume activity indicates the presence of the institutions or the market makers. So it broke this important resistance zone with good volumes. It indicates the presence of the institutions or the market makers, because retailers don't have the power or the capacity to push prices aggressively towards the upside. It is only the institutions or the market makers who have the huge money, and they could push the prices aggressively towards the upside. And this is the footprint. High volume indicates the presence of institutions in the markets. You should always remember that. So if the volume is happening with high volume, which is higher than the average volume traded on that particular instrument, it could be a potentially successful breakout. Okay, and then we saw a pullback which is of lower volume. So here the institutions are not present. So what is this indicating? That after this congestion area, prices broke out with very good volumes, and the pullback is of lower volume. This is higher chances that the prices will now push towards the upside, because this could be a potentially accumulation zone. Okay, similarly here, after a congestion zone, prices broke down this support level with good volumes, which indicates the presence of institutions, and then the pullback is of low volume. So this is indicating strong selling pressure, weak buying pressure, and now prices could potentially move towards the downside. So, and this is a potentially distribution zone. Okay, similarly here, this is a very important concept. See, suppose prices are moving towards the upside very aggressively. It means demand is overcoming supply. We are in a very strong uptrend. But what happened in this uptrend? We see a huge upward momentum with very high volume, which is parabolic. Okay, remember, we were already in an established uptrend, but now prices have started to shoot up aggressively towards the upside with very high volume, which is higher than the average volume size, which is at least 2x, 3x or 4x. So what is this indicating? That after such a huge upward momentum, volumes are suddenly increasing with huge price behavior towards the upside. This could be a sign of a potential exhaustion in the markets. And here the institutions are potentially exiting their positions. Why they are potentially exiting their positions here? See, the activity, the volume is high, which is the first point. It means the institutions are present in the markets. Who are they selling to? They are selling to the retailers who are thinking that yes, the market is in a very strong uptrend, so we will buy here, buy here, buy here, buy here, buy here, and the institutions are selling to them at these higher prices because see the volume activity. So whenever you see a huge volume activity after an established uptrend with parabolic price behavior, this could be a sign of a potential exhaustion in the markets, and now prices could move towards the downside after a consolidation phase, or it could potentially retrace deep in the trend. Okay, also see, after this huge upward movement with huge volume, the selling pressure is also very high. This here the volume in the selling leg is also very high, which is higher than the average volume size. So this is also an indication that the market makers or the institutions are very aggressive at this price levels. They are selling off here and also they are selling off here. when the prices were moving towards the upside, see the volume, very very weak buying pressure. After a strong buying move here and a strong selling leg, prices are now not that aggressive, that they are moving towards the upside with very very low volume. Buyers are trying hard to push the prices towards the upside again, but the volume is very very less, which is again an indication that bears are in control at this price areas, and we could now potentially see a downward movement. Okay, and again when the prices are moving towards the downside, the volume is increased. So at this price areas, supply is overcoming demand very very aggressively. That's why what is happening after this huge parabolic price behavior with huge volumes, and then again a pullback with relatively higher volume, we saw a weak buying momentum with very less activity. Then when again the prices started to come down, we saw an increase in activity. So this is indication that this is a potential distribution area and the institutions are selling off at this price areas. Okay, similarly here we were in a very very strong downtrend, and then we saw a huge downward momentum with very very high volume, which is at least 2x, 3x or 4x the average volume size. Then what happened, we saw a strong buying momentum with good volume. So see, after a strong downtrend, we saw a aggressive downward momentum towards the downside with very very high volume. Then what we saw, for the first time in this downtrend, we saw a huge buying activity with relatively higher volume, because this volume is less than this volume, but this volume is higher than the average volume, and also the buying activity is very very strong. Earlier the pullbacks were very very weak, but now the pullback is very very aggressive from this price area, so which is indicating that this area is very very important for the bulls. And see the selling leg, after this strong buying momentum, the selling pressure is very very weak. So this is indicating that prices now could reverse from this downtrend to an uptrend. So we could potentially look for buying opportunities in this area. See again the buying pressure high volume, selling pressure low volume. So you should combine market structure, price behavior analysis and volume, and then look for a potential entry in the markets. For now we are just analyzing the volume. Okay, after a strong downward momentum, we saw this kind of volume activity in the markets, and then when prices again sold off, the selling pressure was very very weak, and then again we saw a buying which is very very high volume, and the selling pressure is again tapering off. So this is an indication that the bulls are in control at this price area. Okay, see here, this is the example of a trend channel. See, this is a very very strong uptrend. So what we look in a trend channel is the buying legs should have higher volume and the selling legs should have lower volume. This is indication that this is a very very strong upward trend channel. Buying legs higher volume, selling legs lower volume. So we could say that this trend channel is very very strong. Okay, if the volumes here were lower than the volumes here, then we could say that this trend channel is weak. Okay, you should compare the volumes. Here the volume is high, here the volume is low. Volume is high, volume is low. So we could say that the trend is very very strong, and we could see higher prices from these levels. Okay, this is an example of downward sloping trend channel. See, the down legs have higher volume, so this is an indication that supply is in control over the demand side, and the buying legs have lower volume. So this is a harmony. Because the prices are going down, we will see the buying pressure. The buying pressure here is still very weak, and the selling pressure is very strong. So we could say that we should take a trade in the direction of the trend and not take a trade which is not in the direction of the trend. Okay, so this was it for today. I hope you got something very important learning from this video. If you find anything useful in this video, please do like, share and subscribe to my channel, and also do comment down below if you have any queries related to this video. I will definitely try to answer each and every of your questions there. So this was the first part of the price volume analysis. I will bring more such videos, so do subscribe to my channel, and see you in the next video. Until then, it's bye from my side. Take care everyone. Bye.